Welcome to Investing Confidential. We all know the Fed's going to report on Wednesday, 25 basis points baked in. But I'm going to tell you about something that's even going to be more important, bigger market moving event on Thursday. Okay. And that's going to be the Apple earnings. I'm going to lay it out for you, give you some background, and tell you why I think this could be potentially the worst quarters Apple reported ever. Okay. Let's start with the Fed. I'm not going to say much, 25 basis points. They're not going to do 50, but the comment's going to be very hawkish. And the reason they're going to be hawkish is because all the good news that's come in. I'll lay out some more on Wednesday, but that's the bottom line. Hawkish, 25 basis points, not good for the market. Going to drive rates higher. But as I always mention, earnings drive the market. Okay, no matter how you slice it, the Fed, everyone else, you can't fight the Fed. But the market, the stock market, all stock markets are driven by earnings expectations. Okay. So Apple's going to report after the close on February 2nd, Thursday. Wall Street, I don't care about Wall Street, but you have to know what they're saying. They're looking at revenue about 121 million. These are estimates. Consensus is about between $1.90, $1.95, depends on how bullish you are. There's a million analysts who put earnings estimates on Apple, but it really doesn't matter. What matters is the commentary. What matters is the guidance. Let's take a layman's look at this. Let's assume that we don't have Wall Street professionals. Let's look at that from just let's look at it from what we can dig up. We know a few things. We know that Apple had massive production challenges in the last 6 months in China. Okay, Apple is a China-centric company. Everything they do revolves around China. Their incremental demand for iPhones revolves around China. Their assembly of iPhones revolves around China. Nothing else. Their biggest assembly operation, the biggest physical operation is in China, is Foxconn. All right. Foxconn is a public company, but look, Foxconn is Apple. Okay, what it tells you. Foxconn is Apple. And Foxconn, as we know, had a lot of problems with the riots because of the COVID and all this other nonsense that went on. And that affected the last quarter, okay, which is the first. Again, Apple is a fiscal company. Everyone's reporting fourth quarter. Apple is one of those crazy companies doing first quarter fiscal year. It's irrelevant. But anyway, they had problems last quarter. But we all know this is all about the future, okay? And we have tech layoffs. We have all this stuff going on. And it's hard anyone to believe how Apple could be just riding high, okay? Let's look at some of its competitors, some companies in its industry, what they've been saying this last 30 days. Okay, Samsung, just 24 hours. Considering, this is from the Korean press, considering cutting chip production. Wow, that's demand. Samsung is massive. Samsung is Apple's biggest competitor by far. They also make chips. They're considering cutting chip production. What does that tell you? Let's look at Microsoft during their earnings call. And I quote, growth continued to moderate, especially in December. They're being kind. What does growth continue to moderate mean? Growth is falling off a cliff. Demand is falling off a cliff. Okay, that's the bottom line. In December, Christmas time, Microsoft, computers. Think about what Microsoft really means. Think about that quote. Intel, expect challenging macro environment at least through the first half of 2023. Again, from their earnings call. You make your own conclusions, but I'm seeing a trend here. Okay, let's look at something from the DigiTimes. Now, DigiTimes is not a Wall Street rag. It's not it's all on tech. Okay, and one of their writers says they believe first quarter MacBook shipments could have been down by 40 to 50%. I don't know if this is true, but something's happening. We know something has happened not good. Let's look at Taiwan Semiconductor. Again, Apple's computer company. Everything runs on semiconductors. Taiwan Semi, number one semiconductor company in the world. Okay, guiding revenue, 16.7 or 17.5, down 14%. Okay, they're guiding down 14%. Okay, we know from previous in the last year that chip inventories are at all-time highs. We know that chip demand is down. And now We're seeing it right here, Taiwan Semi. Okay. Now, this is a quote from China itself. The Chinese government puts out a lot of macroeconomic information. A lot of it is not believable, but especially when they put out negative news, you have to sort of, because they don't like to put out negative news. China November smartphone shipments at 23.2 million, down 36% for November. 36%. On a year-to-date basis, smartphone shipments were down 23%. Now, let's put two and two together. Apple assembles most of their phones and other stuff in China. China November smartphone shipments were down. What does that tell you? Apple assembles and ships smartphones out of China. Okay, the guidance is going to be the key on these earnings calls. Commentary, then the guidance. If they guide up, if they guide anywhere but down, that means they're lying. That means they are playing a game, and you don't want to be invested in companies that lie and massage their earnings. Okay, which they do quite a bit, but a lot of companies do that. Because the bottom line is this: look at these tech layoffs. We've been talking about this obviously early on, and obviously everyone's talking about it now. You could see there's been a lot of tech layoffs. Now, the press is going to tell you, oh, well, they hired a lot of people for COVID. No. That's a lie. Tech companies hire people all the time. There was no extra hiring during COVID. That's a complete lie. And these layoffs are not a lie. These layoffs are real. We've never seen anything like this since the burst of the tech bubble in 2000, 2001, but not these numbers. These are massive numbers, massive. Personally speaking, I'm an iPhone guy. I have a lot of iPhones. I have 5 iPhones on my account, my kids, my wife, etc. This is the first time on my statement I don't have one phone on some type of plan. That means we haven't upgraded our iPhones in a long time. Apple is not innovating anymore. They're not an innovation company. They used to be prior to Steve Jobs passing away. They used to be, but we haven't seen an innovation from since then from Apple. Tim Cook is not an innovator. He's a good manager. He's not an Apple innovator. This is he's turned Apple into a retail company. Okay, but Apple has a tech PE. Okay, 25, 26, 27 times earnings. You know what retail company PEs trade for? Historically, in the teens. In the teens. So imagine Apple is in a environment, recessionary environment around the world, declining demand, most likely declining earnings. And because they don't innovate anymore, their PE is going to start to come under pressure. You look at this chart today, and you look at Apple trading at the 200-day moving average. The setup is clear. For a trader, this is a classic setup. Okay? You know where Apple should be going. I don't know what they're going to report on Thursday. I have no idea, but I think you should be aware that if Apple misses as much as I think they should miss and guide down, the ramifications for the market, especially tech sector, are massive, even more than the day before when the Fed reports or Fed raises rates again. Okay, so just beware. So if you're an investor, be very, very careful out there.